Hey everyone, welcome back to Corporate Dakota, the place where we turn corporate filings into something you might actually want to read. Today we're diving into PB Bankshares' annual report, which, spoiler alert, is less about high finance and more about, well, let's just say keeping the lights on at your local branch. First, a quick summary. This report, officially called a 10K, is basically PB Bankshares' yearly homework assignment for the SEC. It's got everything from their business strategy to their financial results, all the juicy details that investors need to know. Let's talk money, specifically how much the company is worth. The report tells us that the value of voting and non-voting common stock held by non-affiliates, basically regular investors like you and me, was around 28.4 million outstanding stocks. This number gives you a basic sense of the company's size and public float. Now let's dive into the loan portfolio, which is the heart of any bank at the end of 2024. PB Bankshares had about $50 million in total loans. Of that amount, around $103 million was in 1 to 4 family residential, and about 205 million Jalajans was in 1 to 4 family residential, and about 205 million residential, and about 205 million resident commercial. Think office buildings, retail spaces, and other business properties. The bank is shifting away from home mortgages and focusing more on lending to businesses since they can yield higher returns. Checking out their maturity table, we can see a breakdown of when the loans need to be paid back. It appears most of the money is expected back in 5-15 years, about $20-44 million under dollars and $4 that mean. It's relatively safe since you don't need to worry too much about cash flow. Now let's talk about those loans that aren't exactly performing for the bank's non-performing loans, meaning those that are either not accruing interest or are way past due, decreased from $1.4 million this year. This suggests they are lending to more reliable people. The biggest chunk of that change came from hotel loans, moving off that list, and payments and payoffs on the 1 to 4 family residential side. To protect against possible losses, the bank sets aside an allowance for credit losses. At the end of the year, that allowance was about $4.4 million. This is the bank saying we expect that we won't get back a percentage of what we lended. They're also called net charge-offs. A bit later we can read they had to average loans outstanding during the year was 0.06%. This is a very small amount, which means they aren't losing much money. Moving on to investments, the bank mostly puts its money in US government agency securities and some corporate bonds. The total investment is about $50.66 million that they expect to yield around 3% in interest. Where does the bank get its money from? Mostly from deposits, with the largest amount coming from certificates of deposit and interest-bearing demand deposits, almost 70% of the pie. Speaking of deposits, it is worth pointing out that uninsured certificates of deposit, meaning those over $215.7 million, and almost $5 million of that matures in 3 months. This is a bit concerning, but not alarming. Banks usually borrow between each other and take out loans if they have money issues. While the bank grew to $354 million, with certificates of deposit making up 46% of the balance and averaging 4.46%, what matters is that non-interest-bearing deposits were 6.97%. This means the bank has a good amount of deposits that cost it nothing. Stockholders' equity, which is the amount of assets owned by the shareholders, grew to about $48.7 million, with retained earnings comprising a large percentage of that. For their non-interest income, they mostly have salaries, professional fees, and data processing expenses to account for, but the general trend seems stable. Alright, putting on our regulatory hats for a moment. Federal regulations, guidelines, and banking agencies are referred. What do they mean? Basically, the federal banking agencies, including the FDIC, had to establish a community bank leverage ratio for institutions with assets of less than $10 billion. In 2024, net charge-offs to average loans outstanding was 0.06%. It has gone up slightly compared to last year at 0.04%. A bit of risk, but very little, nothing to make assumptions over. As for risks, there is a mention of cybersecurity. This is a boilerplate thing that many companies mention. PB Bankshares claims they have an information security program and regularly assess risks. They also mention never having any Cs with it. Let's hope they keep it that way. Scrolling to see what kind of physical infrastructure the bank is operating from, we can see that the main office in Coatesville is being leased, while others are being owned. And we can also see the value of those locations, example one owned location being valued at around $499,000. Going into how their internal structure operates. Loans of certain values need approval from specific officers. For example, a loan of over 1 to 2 million requires the signature of the chief executive officer. This indicates, at least to some extent, the diligence needed to approve any specific loans. This makes a lot of sense for a smaller bank where every dollar counts, and this can mean that money is managed well. Zooming out for a second, the bank continues to shift its portfolio from residential to commercial loans. This higher interest rate strategy will pay off well if they can source clients that are not overly risky. That is key to PB Bankshares' strategy. To navigate economic conditions, they need to target a market for business customers and modernize the banking operations. Overall, looking at these results, PB Bankshares is not terrible. For now, it seems to be trending upwards, and if the strategy of higher interest business loans works out with enough customers, it will certainly provide a path for more profit and market gains. I'm a bit concerned with seeing the CD maturing in under a year. That will increase expense greatly if customers decide to pull out. But the bank has relationships that should mostly prevent that turn. Of course, this is just one person's perspective based on limited information. I strongly recommend that you consult a professional for any financial advice. And with that, thank you all for watching. If you enjoyed, please subscribe, like, and comment.